All right, let's get down to business and talk Morgan Stanley.
Yes.
Earnings call Q3 2024. I know earnings calls, not exactly everyone's idea of a riveting afternoon, right?
Right.
But
It can be a little dry.
they're more than just numbers on a page,
Yeah.
They paint a picture, really, of the global economy. They show us where the big money is flowing, and maybe, just maybe, we can glean some insights, pick up some investment strategies along the way.
Absolutely. And there was actually quite a bit of interest leading up to this particular earnings call. Analysts, investors, they were all eager to see how Morgan Stanley was going to navigate, these choppy waters,
Yeah.
market volatility, rising interest rates, that kind of thing.
Yeah, it's a wild ride out there.
Yeah.
And spoiler alert, it seems like they're handling it swimmingly.
They are.
They pulled in, get this, $15.4 billion in revenue.
It's impressive.
That's got to be a good sign, right? Especially in these uncertain times.
It's a very strong signal, especially when you consider that translates to a net income of $3 billion.
Yeah.
We're talking a return on tangible equity of 17.5%. These aren't just, decent numbers. They're thriving.
Yeah.
And what I find particularly interesting is that this growth, it's not limited to just one specific area, right? It's spread across different parts of Morgan Stanley's business, which really speaks to a robust and diversified strategy.
Okay, so let's unpack that a bit, shall we?
Right.
Where exactly is this success coming from? Because it seems like, at least from my perspective, their global strategy is playing a pretty significant role. They've been, expanding steadily their presence in Europe and in Asia. And by the looks of it, that seems to be paying dividends, so to speak.
Yeah, certainly is. I mean, if you look at the numbers, their revenue in Europe, or EMEA as they refer to it, that grew by nearly 25%.
Wow.
And in Asia, even more impressive, over 30% growth. Morgan Stanley, they recognized, and I think crucially, they recognized this early on, that if they wanted to truly, capitalize on global investment opportunities, they needed to have a strong foothold outside of just the U.S. They need to be players on the world stage.
Be where the action is.
Exactly. And these numbers suggest that kind of, forward thinking, that approach is really yielding some impressive results.
It's like they're playing chess.
Yeah.
While everyone else is stuck on checkers.
That's a great analogy.
They're thinking several moves ahead.
Absolutely.
Strategically positioning themselves for long-term success.
Long-term vision.
Yeah.
That's key. And speaking of strategic moves, we got to talk about their wealth management division, right? I mean, that's another area where they're knocking it out of the park. Record $7.3 billion in revenue this past quarter.
That's a big number.
It's huge. And a lot of that, can be attributed to this idea of fee-based flows, which might sound a little jargony, but...
Well, yeah, for those of us who don't, speak fluent Wall Street, maybe you can break it down for us.
Of course. So, in essence, what we're talking about here is a shift, right? Clients, they're not just, going to Morgan Stanley for a bit of investment advice here and there. They're essentially handing over the reins, entrusting them with managing their wealth and saying, here, you guys are the experts, handle it. And they're willing to pay, fees for this service because they see the value, especially in volatile times, of having a steady hand at the wheel, right? Someone who can navigate those complexities.
So it's like having a seasoned captain.
Exactly.
Navigating, guiding you through the storm. Exactly.
Yeah.
Of the market.
Yeah.
Making sure that you don't, hit an iceberg or two.
Exactly.
And end up,
It makes a lot of sense.
Yeah.
When you think about it.
Totally.
Especially when things are uncertain, you want that expertise.
Exactly.
Yeah.
So they're not just throwing darts at a board, huh?
No, not at all. They're thinking ahead, adapting to the way the world is changing.
Which brings us to, well, I guess the elephant in the room, right? AI, artificial intelligence, it's everywhere we look these days, and it seems Morgan Stanley is embracing it full on.
Absolutely. And they're doing it in a way it's not just, a flashy headline. It's not just about, oh, look, we're using AI. They're actually integrating it into the nuts and bolts of their operations.
So it's not just some marketing ploy.
No, this is the real deal.
They're actually putting it to work.
Exactly.
Okay, so for someone like me who, didn't get a PhD in in algorithms. How are they actually using AI? I mean, what does that look like in practice?
So one of the most significant developments, I would say, is their partnership with OpenAI.
OpenAI, that's the Chat GPT company, right?
That's the one, yeah. So they're taking that technology and they're integrating it into their research analysis. They're developing tools that will help their advisors interact with clients in a more insightful, more personalized way.
So they're not replacing their financial advisors with robots.
Not yet, at
Well,
least.
not yet.
But it's augmenting, it's enhancing what they're able to do.
So AI is like the brainy assistant
Precisely, yeah.
that helps the advisors make even smarter decisions.
Exactly. It's about leveraging technology to provide the best possible service to their clients.
It's about working smarter, not harder, right?
Exactly.
And it
Exactly.
makes sense, right? I mean, think about it. Think about how much AI is already a part of our daily lives, like
Yeah.
our streaming services, our navigation apps, it's everywhere.
Yeah, it's becoming ubiquitous.
So it's only natural that finance would catch up.
Absolutely. Absolutely. It's the way of the future.
Okay, so we've talked about their global strategy, we've talked about their embrace of AI, but there's another piece of the puzzle that we need to address, and that's NII.
Right. Net interest income.
Net interest income, yeah. Which for those of us who don't work on Wall Street, could you maybe give us a quick and dirty explanation of what exactly that is?
Of course, of course. So at its core, net interest income is essentially the profit that a bank makes,
Mm-hmm.
right? From the difference between the interest it earns on the loans it gives out
Okay.
and the interest it pays out on deposits.
So it's like a spread.
Exactly.
It's the difference between what they're charging borrowers and what they're paying to savers.
Precisely. It's spread, it's margin. That's the name of the game. And in this current economic environment, right, where interest rates are kind of front and center, NII becomes a really crucial metric to keep an eye on.
So if interest rates go up,
Yeah.
banks like Morgan Stanley, they generally earn more from NII.
In theory,
And
yes.
theory.
But in practice, it's not always so cut and dry.
Okay.
It's not as simple as that. There are other factors at play here. Things like loan growth,
Hmm.
the levels of deposits they have on hand. And of course, with all this talk about potential interest rate cuts in the near future, there's a degree of uncertainty surrounding NII. It's not a guaranteed slam dunk, so to speak.
So it's not a sure bet, huh?
Not quite. No,
Mhm.
it's a bit of a well,
It's a gamble.
it's a bit of a balancing act, you could say.
Okay.
They're trying to anticipate, how these different factors are going to play out.
Mm-hmm.
But to their credit, it seems like they're staying on top of it.
Yeah.
They're managing their balance sheet carefully, and from what we're seeing, there are some positive indicators.
Okay, so that's good news.
It is, and it just goes to show, even in these uncertain times, when there are a lot of variables, having that foresight, that strategic approach to managing your finances, it really does make a difference.
It's about planning for the unexpected.
Exactly.
Okay, so we've thrown a lot of jargon around today. I talked about NII and all sorts of financial terms, but at the end of the day, why should the average person, someone like me, why should I care about NII?
That's a fair question. It's easy to get caught up in, the technicalities of it all,
Mm-hmm.
but at the end of the day, NII, it does have a real world impact.
Okay.
It can affect things like, the interest rates that you get on your savings accounts.
Oh, okay.
Or the rates that you're paying on your mortgage, for example.
So it's not just a number on a balance sheet.
No, it's not just an abstract concept.
It actually filters down
It
and
has a ripple effect.
it affects our wallets.
Exactly.
And it's all connected.
It is the
Well, I have to say, you've demystified the world of earnings calls for me today.
Well, I'm glad to hear that.
We've gone from what I thought would be a very dry,
Right.
Look at some financial statements,
Yeah.
to actually like a global expedition through finance, technology,
It's all interconnected.
a bit of economic forecasting thrown in there.
It is, and that's what's so fascinating about it, right? It's
Yes.
not just about one company's performance. It's a window into the larger trends that are shaping our world.
It really is, and it's fascinating to see how how companies like Morgan Stanley are adapting to those trends, innovating, staying ahead of the curve.
Absolutely, and that's something that I'm always eager to keep an eye on.
Yeah, well, if you're as intrigued by all of this as I am, and I have a feeling you are, you can dive into the full Morgan Stanley earnings call transcript.
Yeah,
We'll have a link for you on our website.
check it out.
But for now, keep those thinking caps on
Absolutely.
and stay curious.
Stay curious.